Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you. Mike Novogratz, CEO and founder of Galaxy, joins us. We talk with Mike about AI, markets, unemployment, monetary debasement, the prospects for Bitcoin, this story for other blockchains and tokenization and real-world assets, and what he expects for next year, and a couple of New Year's resolutions, who's on the naughty and nice list. Because I should say, Merry Christmas. If you're watching this right when this episode comes out, it is Christmas in the United States and around the world. I think, we recorded this about a week before Christmas, but I wanted to wish everybody a happy holiday season, no matter what you celebrate or anything at all, and a happy new year. And before we get to this great interview with Mike, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. What a year. 2025 is wrapped. It's in the books. Bitcoin finished down on the year, unless something crazy changes between now and January 1st. But the foundation for a future of higher prices and better value, I think, surely was laid in 25, whether it's the regulatory clarity and shift in Bitcoin and crypto's favor, or the maturation of the institutional market infrastructure. So I think there are, it's safe to say, good things coming in the future for Bitcoin. And I want to also wish everybody a happy new year, because we will not be here next week. We're taking a week off. This is going to be, I think, our 205th episode, 200 plus episodes of Galaxy Brains. And whether you joined us for every single one, or if this is your first time, thank you for listening. And let's hop right into it with Mike Novogratz. Mike Novogratz, CEO, founder of Galaxy Digital. Thank you for coming on Galaxy Brains.
You know, my first Christmas podcast.
This is coming out. If you're listening to this the day it comes out, Merry Christmas. It is Christmas, and here's Santa, St. Nicholas.
Well, certainly we're hoping St. Nicholas, we're like 10 days pre-Christmas, that he changes the trajectory of Bitcoin and other cryptos. Because right now, it feels like a damn lump of coal.
It really does, right? It feels like it does feel, that's such a
We got coal!
God, that's, clip it, Phineas. That's such a good clip. We did not have a Bitcoin Santa Claus rally. Frankly, the opposite, right? I mean, end of the year slump.
Your year-end prediction is looking pretty horrible at this point.
I know, and people called me bearish for lowering to 120.
Yeah.
And it's 87.
Listen, if you just look at the market technically for a second, 100 was a giant level to break, and there was a tremendous amount of buying done above 100. And so 100 is now the ceiling, and we will break it at one point. I fundamentally don't think we've seen the high in Bitcoin in our lifetimes, therefore we'll break 100 at one point. But until we do, we're in a bear market.
I think that's right.
And I would like to think it's an 80 to 100 market. It might be a 75 to 100 market. What's my optimism? Where does it come from when it comes? I think we're going to get a new Fed chair in the next few weeks. He's going to be dovish. I think you're fully priced in 2 Fed cuts next year. I think you're going to get more than that. I think you're going to take rates to 2.5% pretty quick, mostly because both the candidates are worried about jobs. Both Kevin Warsh and Kevin Hassett. AI is eating jobs. And if that story actually keeps playing out, you're going to see them cut rates. And you're more importantly going to see the Fed find lots of ways to inject liquidity into the system. And they've already started doing that. They're buying treasury bills.
Right. I saw that.
The SLR, they're moving. That's always harder to get done around year-end, because year-end periods where their liquidity is really tight. Everyone's trying to clean up their balance sheet. And so I think you'll see post-year-end a wash of liquidity, and maybe that's the story. Plus, there's categoric bearishness on crypto right now.
Yeah.
Other than your 120 prediction, which is so off, and people are going to throw tomatoes at you on Christmas. There's a lot of bearishness. And so you could see, paradoxically, a real shift dollar off. Gold and silver are on a frickin' heater, right?
Mhm.
Silver is the lead horse in this race right now. But when I think about macro trades for next year, it's a lot of the same ones. It's the steepener, it's gold and silver, it's copper. Bitcoin could join that crowd. So that's what we'll see. If it doesn't, it's going to suck.
Yeah, I mean, last year in 24, Bitcoin ranged between 40 and 60 for like 270 days. Something, people are asking like, what's the bullish catalyst? How low will we go? And I also think a third option that people are sort of forgetting is just chop for months.
Yeah, we could have chopped.
Right. I mean, we did last year.
Today, we're sitting here at 86,500, and then about 30 minutes later, it's 90,000, 90,500. I was like, what happened? No one knows.
Nothing.
I was like, we're supposed to have a really good firm to understand what's happening. And
Yeah.
we're at a very illiquid period right now. And so one big flow can drive the market, and then there's a short covering. And then it rolled right back over with the NASDAQ.
So
The big risk to Bitcoin, and it's a big risk to all the crypto, is that there is a scenario where the NASDAQ shits its pants, and we really have an unwinding of some of this exuberance around AI. Any damage to XAI, I'm not excited to
ChatGPT, OpenAI.
OpenAI.
Yeah.
Right? Sam Altman is the linchpin of so much of this. If it becomes clear that he's getting whooped by Gemini, or like if he has harder time, he's got a lot of capital he needs to raise to fund all this, expansion. And that whole data center to chip, the hyperscaler, to
Like supply chain or stack. Yeah.
Listen, I'm still pretty optimistic that people need a lot of power. You saw a deal today with Hut 8, spectacular deal for them. Google and Anthropic paying up a lot for 2027 power.
Yep.
And so, we got mixed signals, but there's a lot of credit risk out there. And today the stock market is down. If the NASDAQ picks up steam to the downside, crypto's not going to go higher.
Yeah,
it might go sideways. It probably goes lower.
Yeah, it's hard to imagine a world where Bitcoin performs really well while stocks are down a lot. I mean, I think this is one of the questions.
We'd love to see that decoupling.
Well, I think this is what I was going to ask about, because in April, we had the tariff tantrum. S&P was down a lot. Bitcoin obviously was down a lot. I think it was the first time the S&P corrected 10% or more out of like the last 12. I mean, I didn't go back further than that, but that the dollar depreciated on the unwind rather than appreciated.
Yeah.
People were looking for non-dollar denominated hedging assets. Surely Bitcoin might eventually
it could certainly
find its footing there.
Sell the dollar, buy the euro, buy the Mexican currency, the carry currency, right? That maybe Bitcoin. I mean, we'll see. And it doesn't take a lot. It just takes some flow to start. But right now, there's not the buyer of Bitcoin. There's some sovereigns that'll buy. Really, is U.S. wealth, and right, they just started. You have a lot of the big banks just finally said, "Oh, you can let your registered investment advisor sell Bitcoin," and so I think it's going to happen. There's $45 trillion of money managed for baby boomers in U.S. wealth. If you get a 3% allocation, it's $1.5 trillion. That would make the price a lot higher.
Yeah.
And so, again, I'd be really nervous if I thought 129 was the high we'd ever going to see. I don't think that's the case. And so now it's just managing this range until we get a new catalyst to take us there.
It does feel like 26 is shaping up to be very chaotic in investing, right? Like there's a lot of questions.
You step back and get out of macro for a second. It's chaotic in macro, and you think about crypto. 2026 is going to be an amazingly important year, because it's the year where we're moving away from crypto to using the same rails for real world assets. And that's not going to happen fast, right? We're going to tokenize Galaxy. We have tokenized it on Superstate, and hopefully soon we're going to take that little token and throw it into the wilderness, and it's going to trade on, Radium and
DeFi,
Uniswap, and all these DeFi platforms. And all of a sudden, people will be, wait a minute, tokenized equities will be a thing. Sometime between now and the end of next year, tokenized equities are going to be a real thing. And I think what you're going to see is they're going to get the big brands in the U.S., because people want brands. So if it's Apple or Tesla or SpaceX or Galaxy,
Yep.
are going to get tokenized. They're going to get sold to places in Peru, in Paraguay, in Indonesia, in Cambodia, in Nigeria. Right? It's the rest of the world that needs banking in a wallet.
Yeah, we're mostly okay here in the U.S. in the
we
scheme
got,
of things.
you know, I got Robinhood.
Buy
I got,
stocks in like 1 second.
you can buy on the Galaxy One app. You can buy
Yeah.
stocks, and so our access to great financial products is pretty good in the U.S. And so crypto's first base use case is rest of the world.
Yeah.
It's banking the unbanked. It's not just banking the unbanked. It's giving financial services and products to the unbanked. Like, I want a new mission statement at Galaxy. Maybe I think the rest
Work
of the rest of the management committee is going to shoot me for because I haven't even told them. But it really is. We want to help people increase their wealth. So if you're in the Galaxy One wallet, at the end of the year, I want it to be higher than it was at the beginning of the year. And so that is giving them access to product, but it's also giving them advice on what to buy and how to buy it and when to buy it, right? As opposed to being a broker that's just buying and selling. I want our clients to get wealthier because then you feel like you're doing something good for society.
That's right.
So that's going to be my new mission
Yeah,
statement.
I love your point about this in 26 about real world assets because crypto's been this story of creation and destruction over these many years that we've been involved, right? Like you had the ICO, powerful idea, democratizing fundraising, but, also created a lot of destruction in that, only a few actually raised money and made it through and did great.
Because we had a lot of product.
NFTs were awesome, but, giant bubble, meme coin, sort of a reaction to that also. But the way I think of it is through all of those creative destruction cycles, the infrastructure got built. And it's really, really good infrastructure. So now the challenge to me is, can we get some good assets on these things?
So you're going to get good assets. You're going to get tokenized real-world assets, and you're going to get good tokens.
Yeah.
I keep pointing to Hyperliquid. Full disclosure, I own some, a lot. It's a good token. It's a blockchain, but mostly it's an exchange, and they take the profits, 98% of the profits that they make on the exchange, and they burn their tokens.
Yeah.
And so I'm not saying it's an equity, but it is easy to value, and it feels like equity-like.
Yeah, more like a business.
Like business. And so I think that's the future of tokens. I think you're going to see good tokens trade well, just like good real-world assets. And you're going to see community-based tokens, which was all crypto had, slowly bleed out, with the exception, I think, of Bitcoin.
Yeah.
Now, Ethereum, Solana, big blockchains that people are going to build on top of, they have their value because of community.
Yeah.
But man, oh man, they better work that narrative. They really got to have shit working on it to keep that narrative of why they're important tokens.
I think that's right.
Because the moment you're not money, Bitcoin is money, then you're just a business. The valuations are a lot lower. And so the questions will be, can Ripple hold it together? Can Cardano hold it together? Like who became money and who were businesses that are going to now be valued at, well, how much do you make me?
And if they're not money and not a community, do they actually have a good business? And I think you're right when you...
Well, can you keep the community together when there's so many other options?
That's right.
That's really what it is.
Yeah.
Right? Like Charles Hodgkinson, bless his soul, he's kept the Cardano community with a blockchain that, people don't really use a lot, or, I'm going to get tomatoes thrown at me for saying that. But he's had a strong community just like XRP. Can you keep it together when there are more and more options?
Yeah, and it's...
When I can buy SpaceX levered 40 times. That's a good idea.
Yeah, it's kind of like a put up or shut up moment for crypto, right? Like, you've made it through the regulatory attack. You've now got this institutional market structure foundation.
But it's going to make this year complicated because that doesn't happen overnight. It's probably a 1 to 3 year process, not a 1 to 3 month process. And so we're going to have this transformation of our industry. And even at Galaxy, like us, we're spending a lot of time, and I'm going to spend more time in January, literally mapping out where we think the world's going and what our place is. And I think every crypto company is doing that. You're going to see a lot of neobanks that, and crypto exchanges, crypto wallets are all going to become neobanks. They're going to get stable coins, money market coins, tokenized equities, Bitcoin, other cryptos like that. Everyone's going to try to build a similar business, which is let me give you a bank and a wallet.
Yeah, it's the great convergence.
Yes.
Do you think that where do you think that lands? You know, we're introducing some decentralization into the capital markets via crypto. Are we going to make the TradFi broker dealers and RIAs and whatnot more decentralized, or are they going to make us more traditional?
That's a good question. I think it's going to be a little of both. What scares me a little bit is that this idea of things being decentralized and private is going to get demoted in terms of efficiency.
So you're worried we get a little.
Well, because listen,
The suits get more control, and that could kill the soul of
you
crypto.
look at Base as a blockchain.
Yeah.
It's really convenient. It's part of Coinbase. It's not really a blockchain. It's a database.
Yeah, it's like a computer in their basement is the joke I always make.
Yeah. But most people are okay with that.
Right.
And if the world becomes okay with that, well, that makes Ethereum less important. I like to think your data is powerful. Here's an analogy. When I first went to India, I waited like 2 hours in the customs line, and I filled out these freaking forms, and some lady's out there, and she's stamping, and there were piles of paper all over this booth. There were literally thousands and thousands of pieces of paper, and I thought, that data is worthless. It's going to be toilet paper or a bonfire later on. No one's ever used that data. So they couldn't use data. Now you walk through customs, and they just go like this. You don't even have to have a passport. Your face is your data, and it gets filed, and they can use it. They can track you. I was talking to the people in Abu Dhabi. It's shocking how well they do this. They have your Emirates ticket to your passport, and they know what you spend. So they know on each flight, on each Emirates flight, flights from Cambodia spend this much, flights from New York spend
the
this much.
value of every passenger, basically, to their economies.
So the data is so valuable, right? And so now that data is valuable, it's also powerful. Like, so if you're in Canada and you were a trucker during those COVID protests, you could get your bank account closed. If you were living in Kashmir, Modi erased 11 million people because he didn't like them. Like, man, that kind of sucks to be erased, right? And so I think having decentralized identity systems, decentralized blockchains, having some privacy, but also no one owning the data is really important.
Yeah.
But a lot of people don't agree with me.
Yeah.
In China, they don't agree, or they don't have a choice. They've always said the collective is more important than the individual.
That's right.
And so that battle or that debate is still to be determined.
Yeah, I think you're right to flag that principle is actually at risk with the great convergence, right? We'd love to bring that own your data, individual liberty into the TradFi system.
Don Wilson's blockchain.
Canton.
Canton is it's a beautifully built blockchain. It's got it's got lots of things. It's got a lot of the Wall Street guys on it. I don't think it'll trade great because it doesn't get distributed. The little guys are what creates value in blockchains, distribution, which creates value in blockchains, turning them into money, turning them into passion, community value in blockchains. But it very well might be a very well-used blockchain that just functions as a great,
just good infrastructure,
semi-centralized database.
Yeah. It's interesting, your point, though, it's sort of complacency around what was originally like Satoshi's, one of his main goals was decentralization, a distributed peer-to-peer electronic cash system, right? And then we're saying, well, let's make it.
If you want to get your revolutionary juices back, you got to just go out with my buddy Joe Lubin for another cocktail. Because he's a firm believer in this, how important it is to have a Satoshi-like system.
Yeah.
But we'll see. We'll see.
I do think there are good policy reasons. You make a great case, I think, on the privacy of data, owning your data. Another one I think is like credit risk, right? Like we have an enormous risk management team at Galaxy, and they're really good. And we do real-time monitoring of all the venues that Galaxy trades on and adjusts every time, including the decentralized ones. And we actually give a higher rating in some instances when a system has no central point of control. It actually makes it more creditworthy in our mind, less risky. So there's a policy reason for wanting decentralization. I feel like we've got to tell that story to TradFi, to Wall Street, that sure, we're going to wear suits a little bit more and
listen,
join you guys,
there-
but you should take
I
some of
think
our thing.
The one thing that everyone should take note of, right? You're down in D.C. right now discussing this market structure bill, which unfortunately got punted till January.
Yeah.
One of the big issues is around DeFi. And lo and behold, guess who shows up? The king of frickin', basically the JP Morgan of our time, Ken Griffin.
Yeah.
He is fiercely smart, fiercely tough. And he was like, no, that's unfair.
Yeah.
I don't want DeFi. I like centralized exchanges because I own them all.
Yeah. Yeah, it's true.
I own the liquidity. I get the order flow. Like I don't want Hyperliquid.
Yeah.
Hyperliquid is an anathema to Ken Griffin.
That's right.
And so he's going to fight it.
Yeah.
And just like casinos and sports betting platforms, they kind of got caught flat-footed with
Prediction markets.
prediction markets, but don't think they're not fighting. They're fighting at the state level. They're trying to change the rules federally.
Yep.
Like this is because they say that's unfair.
Yeah.
I say, well, tough luck.
Yeah.
That's how innovation happens.
That's right.
God, I wish I was in those prediction markets.
I mean, the fact that they, it is quite a development.
Shout out to Kalshi and
and Polymarket.
Yeah,
The
Shane.
fact, the Shane and Taruk, I think, from Kalshi, I think the fact that they got the CFTC on their side here too is, I mean,
Every once in a while something happens that doesn't make sense to your rational way of thinking, like the way you've always been thinking. But it happens, you're like, oh, there's new rules.
yeah, there's new.
Let's pivot.
Yeah.
We need to work hard at Galaxy to figure out our role in prediction markets.
Yeah.
So, I mean, it would be crazy that our Galaxy One app doesn't have a prediction market portal. It will in time. Like I'm screaming like time should be yesterday, but it takes a while to build this shit in. And we need to be market makers. We need to figure out all the ways we're going to participate.
Yeah.
And trust me, the elves are working on it.
Yeah.
But I think every shop like ours, and you've seen a lot of announcements already, is doing the same thing.
Yeah. It was a very old idea, right? What was that? What was it called in 17? Augur.
Augur was the first, I remember.
Yeah, and it was such a good idea.
Joey Krug.
Yeah, Joey Krug. And it didn't.
Joey Krug, Pantera, shout out.
Yeah, shout out to Joey and Dan at Pantera and others. It didn't work at the time though, but now it was sort of like gradually then all at once.
Consensus had one too. It was called Gnosis.
Yes, and it was gradually. Nothing really happened. Good idea, didn't really work, and then all of a sudden it was like bam, right? Like kind of like last year's presidential election.
It was election, and those guys were ballsy. They were like, screw it, we're doing it.
Yeah, I mean, Polymarket had been forced out of the U.S.
You know what? It's interesting. Like, and this is where you got to give Shane some credit. He's a charismatic guy, and he's kind of funny. I wish I had invested with him, but I just thought he was a little too out there, and I didn't invest with him. And big mistake.
Yeah.
I remember when I had lunch with Travis Kalashnik.
Yeah.
From Uber. And I had been pitching decentralized Uber. And after I had lunch with Travis, I was like, that would have never worked. He needed to break rules to get Uber done. And he wasn't scared of them. He shattered rules.
Yeah.
He scoffed at them.
Well, because they gave such a good product to the consumers. No municipality was going to ban their people from using it.
He was paying fines for drivers, paying fines for users. And he basically willed that into existence. And sometimes you got to be willing to break glass.
You're saying it needed that centralized force to someone to break the glass.
Yes. Now I think you could have a decentralized rideshare system.
Yeah.
To actually show up now that the idea is so taken. But I'm not sure it could have worked without him breaking the glass.
I saw you post it. So we are recording this on December 17th ahead of Christmas, just even though if you're watching it probably is Christmas. I saw the other day you posted that it was so cold in New York that Ubers, even just to go a mile, were really expensive.
I was like, I'm going to walk. I'm not paying that $48. And then I was like, my hands were freezing. And I was like,
you guys had like a blizzard here.
I should have brought gloves.
Yeah, you had a blizzard in New York a
$48
couple days ago.
1 mile.
Wow. And some people
Bitcoin went down on that day too. So it was a
did.
double whammy.
Yeah, no, it's never good. Some people were in your replies though saying, "What about Uber? Surely there's a decentralized Uber about to emerge to help you with this problem."
Hasn't yet.
Yeah, and it still seems like a pretty good use case, even though you're right. You probably needed Travis to smash all those rules. It's another thing I want to ask you about, Mike, is just AI in general. Obviously, this is we're kind of like it is sort of the definition of the wall of worry, right? Like we've been climbing up all year on AI.
There was an actor.
But people are so anxious about it.
There was an actor who was tongue-in-cheek but serious, famous actor, I'm trying to remember who it was, who said, I want to just go blow it all up.
The AI?
because it's happening so fast, and he's so worried about what happens. Listen, it is the question of our lifetime on how this will play out. There is a non-zero probability that it plays out really poorly, right? Even if you ask Elon, he was like 25%, it ends humanity. We're like, what?
Yeah, and he's saying that's pretty low, though. Don't worry, it's only 25. You're like,
I flip a coin.
you're like, that's pretty high.
There are no guardrails. It is going fast, and it's going to eat up jobs. And so there will be a political backlash coming. It's going to be a big issue in the 2026 midterms and certainly in the 2028 election. And we don't know yet. I know from talking to our investors who've been talking to the guys that run the biggest companies in the world, right, Microsoft's, and that the productivity gains they're seeing are breathtaking. One story was that with $100,000 for the Blackwell chips, an engineer can create 11 million lines of code in a year, and 11 million lines of code is what all of Windows was. So each engineer could do a Windows in a year. Like the productivity increase is spectacular, and you're starting to see in all kinds of businesses. And so how that plays into economics, to inflation, is it the great deflator? But politics is where it's going to show up first. And my guess is it's another factor in the rise of populism. And so I'm trying to get us away from far left and far right, but it's going to be harder and harder to get away from far left and far right.
You think AI is an enhancer for this same dynamic, not a...
AI is just going to make some people richer and richer. Like, here's a perfect case in point. We share an office with Jane Street. Jane Street might now be the most profitable company in the world, pound for pound. Right? If you look at their returns, their profits over the last 12 months, 24 months, breathtaking. Right? It's 3,000 people, 2 partners, making more than the biggest investment banks. Why? They're at the tip of the spear in technology. There's Hudson River Trading. There are all these companies that are making $5s of billions, $10s of billions. When you put them together, I actually added like 8 of them up. It was $50 billion this year with about 12,000 employees.
It's crazy.
That's more than like 5 of the biggest banks with 3 million employees. And what are they doing? They're taking advantage of these market inefficiencies, often created by this young generation of people that want to trade same-day options or trade crypto or, right, who are more speculating or gambling than long-term investing. And these guys are taking all the money. At one point, someone is going to say, is that good for society? That these guys make all the money and no one else, and they're taking it from retail? Elizabeth Warren's going to say, let's put on a transaction tax. And if it gets crazy enough, rational people are going to say, yeah. I mean,
yeah, why should you be able to trade 1 million times a second without paying money? Right? Like they might start asking that.
But listen, the argument has always been we provide liquidity to markets.
For sure.
Well, fuck liquidity at one point when one group's making all the money.
Yeah, at some point.
And so populism comes when it just feels, even if it's not unfair by traditional rules, it feels unfair.
Yeah.
And when people make that much money, it starts to feel unfair. And so I think that's just one symbol of what AI is going to do in every industry. We used to have, whatever those like plateaus, then it became like the pyramid, and now it's like the Space Needle.
It is.
Like all the money is, and this inequality, and listen, I'm a wealthy guy, and so like I don't want to be like the rich guy claiming, oh, those other rich guys.
Yeah.
Galaxy's benefited, I've benefited from it, but this push to the very tip top is terrible for society, and there's going to be a backlash.
I think you've been speaking very eloquently about this problem. So have other big macro thinkers. Anthony Scaramucci, your friend, Paul Tudor Jones has spoken about this. Ray Dalio has spoken a lot about this. That it's actually the wealth inequality, not even income inequality, which is more of a question about the structure of the
both.
job market. Yeah, both. But really, just the stratification is getting so
Yeah.
out of hand that even if you like it, you need to be aware that it's going to create a significant,
Yes.
intractable political problem.
Let's just use SpaceX as one example.
Yeah.
And where I bought SpaceX in 2013 or 14 because I had capital and I had the access. Valor, Antonio DeGracias, had set up a fund. You had to pay him $2 and $20, but he bought the SpaceX cheap. He bought it from employees. Elon gave him the permission to. They were friends. And so only way I could get into SpaceX. I would tell you that almost every single person I would have spoken to at the time, every person listening to this podcast, yourself, if I had said, hey, I got a way for you to put some money in SpaceX, would have said, I got $10,000, I got $5, you put whatever you could have into SpaceX. It was a great story. They had government contracts, like Elon had already done well with Tesla. And so it wasn't like a great, oh, Nova, you were so smart to have bought it. You were fortunate to have money and access, right? That's what Piketty, the guy who wrote about inequality, says. So rich guys put it in. That trade is going to be one of the great trades of my life.
Right.
$5 million.
I saw people even talking about the amount that Fidelity had put in at in 2016
Yeah.
will be one of their great trades.
$5 million if you had sold none of it, even paying the carry at this $800 million valuation is like $330 million. At the $1.5 billion, it's $660 million.
Yeah.
So you put $5 million in, you 100 extra money.
It's crazy. Almost nobody had access to it.
No one had access to it, but rich guys did.
Right.
Almost every rich guy I know has some SpaceX. And they didn't all buy it early. They bought it
No,
later.
yeah. I mean,
but
it's,
that's legacy wealth on a yo bet.
and that's a good example in a bunch of ways, one of which is that that's a private company. In the past, that would have been a public available equity, right?
But it very well could have been. Like the funny part was, I remember when we were thinking about tokenization in 17, I had some space. I said, I should tokenize my SpaceX and sell it out. And I'm glad I didn't. Because that's now worth $300 million.
Yeah.
But you're going to see tokenized privates. You're going to get, and the good thing is, you're going to allow people access. I've always believed that people should all have equal access to investments, but I don't think everyone should be an investor.
Right.
Well, I don't think everyone should be a trader.
Yeah.
Trading takes a discipline and a skill and a knowledge that most people don't have, and you can't do it part-time.
Right.
You're going to lose. And so you can be a longer-term investor as an individual, or you can find the smartest guy in your community
And give them the money to do it for you.
Give them the money to do it for you,
Yeah.
and you become a doctor or whatever you want to do. But this idea that everyone should be a speculator is a fool's idea.
Yeah.
And so again, when I was thinking, how do we redefine our role? Is I want to help people create wealth, not just trade.
Yeah.
And that's an interesting shift I've had.
Yeah, I think that's a really good.
That's not officially our.
Yeah, well, you're thinking about it.
I'm just thinking out
But
loud
I
here.
think you're right. And yeah, and I think the disclaimer too is that you're not specifically saying we're going to embark on a financial advisory new kick, but I think your point is very well taken, especially in crypto, because so much of crypto,
Both individuals in Galaxy One, but institutions.
Right.
How do you help institutions create wealth?
but so much of crypto has been about everyone trading all the time, right? It's been a very speculative. And maybe a maturation that will occur is where we can. How do we help you put that crypto into a longer-term strategy?
There's $3.5 trillion of crypto wealth, and at one point, as people get older, I'd like to save some of it, not have it all in 60 vol assets, and so that's where tokenized money market funds, tokenized credit. We're slowly going to see crypto wealth mature a little bit, and we're going to see TradeFi wealth come into our space, and so. Again, this is a multi-year process where the plumbing starts. We're not going to talk crypto and TradeFi in 4 years.
4 years, it's just going to be part of markets.
Digital assets.
Yeah, the assets.
Digital assets.
Yeah, I think that's right. And it seems like also one of your. I go back to your earlier point when I was asking you where that demarcation line. Do we bring more to them, traditional markets, or do we
Listen,
look more like them?
We are small beings next to how large the global financial markets are. And so I think we're bringing innovations to them that they're going to look at and say, oh, that's cool. This is less cool than you think it is, but we're going to take some of it. And so it's going to be less revolutionary. We're not going to smash them down.
Right.
But listen, over time, I think banks are going to lose out to stable coins and tokenized credit.
Right.
A stable coin and tokenized credit is a bank.
Right.
Right. And so you're going to see an evolution, but they're not dumb. They're going to like figure out how they get to be part of that, that
But our
world.
challenge then is to try to leave our mark there, right? Like dent the TradFi a little, make sure it gets the decentralization that we know is so
That's
useful.
you need more purists. You need more Joe Lubins out there, Vitaliks, to say, hey guys, let's not forget the core of why we did this.
Right.
Right. We didn't do this just to have more efficient plumbing.
Right.
We did this because we believed in privacy.
Yeah, Satoshi didn't say
we believed in cutting out middlemen.
He didn't
we
say
believed in peer-to-peer.
He's that quote, the root cause, the root problem with conventional currency is that you have to trust the central bank not to debase you, and unfortunately history is full of breaks of that trust.
Yeah.
He didn't say the root problem with the traditional markets is that they don't settle quite fast enough.
But so what's so interesting is the Bitcoin story of being a hard asset versus a debasing currency is such a powerful story that we often conflate that with all the rest of crypto. The other crypto story is cut out middlemen, it's peer-to-peer.
Yeah.
Right? And so they're two separate stories.
Yeah.
And they're equally important. And I say that again, they're equally important. And like I like to almost talk about Bitcoin separately as the macro asset. Now, what has been surprising, of course, was I always thought Ethereum was going to be valued as a utility, right? And how often the blockchain got used. You would have some discounted cash flow of the little micro payment you get. And in reality is it became popular enough that people saw it as hard money as well.
Yeah, they just wanted to own it.
Yeah. And so this transition from utility to money is a very precious one. And I don't think very many tokens will make that.
Mm-hmm.
A lot acted like they did, right? Even like little meme coins did for
Right.
a while. But they won't have lasting power because they won't keep innovating. Right. And at one point, someone gets sick of Pepe. I love Pepe.
I never get sick of my rare Pepes. But I hear you. I think that's a really prescient way of thinking about it as well. I don't think doesn't seem like many will cross the chasm and be durable as a money. Bitcoin has though, right?
Bitcoin has.
And you were just in the Middle East. I know you were at Breakpoint. You were at Abu Dhabi Financial Week or whatever it was. What's the sentiment there about Bitcoin and about blockchain?
I think I left that trip far more bullish that in 3, 5, and 7 years, digital assets and blockchains are going to be important because they're going to be more important than the rest of the world.
Yeah.
You're going to bank the unbanked. Like the neobank concept is going to explode. Mm-hmm. And so we just opened an office. I'm excited to go back. There's capital there. There's innovation there. There's excitement there. I also think in the shorter run, people are less focused on the old crypto. Bitcoin, I think people are a little bit confused on why it's not higher, but haven't given up on the story and think, okay, they believe in this. Okay, there were a bunch of whales that sold. Like there is a rational reason why, we sold $9 billion. I look back on that. I should have said,
yeah, for that whale.
Again, that was 1/3 of all of IBIT this year.
From
So
one guy.
person. And so like when you're digesting that, like,
Yeah.
I was actually talking to the guy who helped organize that deal, and he's like, "You think the price would have been higher if we didn't sell it?" And I was like, "Yes, yes, yes. We would have gone a little higher first. We would have come down a lot of
Yeah.
like it's a lot of supply, right? Prices are always set on the margin in markets. Are there more buyers than sellers?
Mm-hmm.
That's what sets a price.
Yeah.
And so
There were a lot of sellers in 25.
there were a lot of sellers.
Yeah.
And that's being digested, and we'll hit an equilibrium, and then there'll be a time when there are more buyers.
But you're saying
But I would be loud and clear. I don't think we've seen the high in Bitcoin.
right.
Like again, have we seen the high in the next 3 months? Probably. Have we said maybe not though? But have we seen the high in the next 3 years? No.
Yeah,
I
agree
really
with
don't
that.
believe we have.
I don't either. And what you're saying too about in the Middle East is that while there are some people squinting at the price and being a little confused, the flame is still alive for them with Bitcoin.
Actually, the flame is live in Bitcoin, and the flame is boiling in the rest of these businesses.
Blockchains and
And listen, if you're Binance, you have 285 million people that you're connected to.
crazy huge business.
So don't you think they're thinking, when there's tokenized Apple stock, I got a lot of people to sell it to,
right.
right? Instead of selling the latest, crypto that I can't even remember the name of, they're going to sell tokenized assets.
Well, this is what I think too is like get the better quality assets on the blockchains because there's a lot of demand for stocks, for Well,
That's going to happen.
Here's the last question. It's Christmas, Mike. You got the Christmas hat on. I called you Saint Nicholas.
St. Nicholas. Yes, nice.
It's not that good, but it's what I came up with. What's under the Christmas tree for next year? What's got you most excited? You talked about market structure, talked about crypto, macro, but I don't know when you see the numbers 2026 in your mind's eye. What's the best thing?
It is a building year for us and for other crypto companies. It is the year for this stuff to start working. We've been an industry telling this story about how important we are. It's time for us to start being important. It's time for decentralized ticketing. It's time for decentralized finance to really show up.
Yeah.
Right. We're gonna, and it might not happen all in 26, but it's the building year.
Yeah.
And by 27, 28, you better see it. Right.
So you're energized.
Again, when you're using crypto on this thing, not buying and selling and trading it, but using it as a stablecoin, using it with your tokenized equities, using it for ticketing, using it, then we've won.
Mm-hmm.
Until then, we're a industry in process.
Well, there you have it. Mike Novogratz, the CEO and founder of Galaxy.
Merry Christmas, everybody.
Thank you, Mike. That's it for this week's episode of Galaxy Brains. Thank you to our guest, my boss, Mike Novogratz, CEO and founder of Galaxy. Everybody have a safe and happy holiday and New Year's, and we will see you next year, 2026. Thank you for listening to Galaxy Brains, the weekly podcast from Galaxy Research. I'm Alex Thorn, head of firm-wide research at Galaxy. Follow me on X at Intangible Coins. Follow Galaxy Research on X at GLXY Research. Read our written reports at galaxy.com/research. And don't forget, if you like Galaxy Brains, to like and subscribe on your favorite podcast platforms like YouTube, Spotify, Apple Podcasts, and more. We'll see you next time.